You know how you can go to the car dealership and test drive a car before you buy it? What if I told you the same thing is possible but with a home? Would you believe me? In this video, I'll tell you everything you need to know about the rent-to-own program so you can stop renting and start owning. And if you're new to the channel, welcome to Money Time Coaching. My name is Robert and I'm an accredited financial counselor with a specialization in financial coaching. And I'm a mortgage agent level 2. For more updates on the rent-to-own program, make sure you subscribe to this channel and don't forget to hit that like button. Who benefits from this? This program benefits everyone who wants to buy a home but haven't saved up enough for a down payment. So it's sort of like a bridge from I can't get a mortgage now to I can get a mortgage later. You also get to live in your potential future home while saving up money. Here's why this is important. Most people who buy homes for the first time have no idea of the carrying costs associated with a home or the maintenance required. So this opportunity gives you a unique experience to truly experience what owning a home would actually feel like. People who are sick and tired of having their rent payments go to waste would also benefit from this, especially for those that may not be able to afford a home now, but expect to have enough saved up to afford a home in a few years. People who have a poor credit score or lower income benefit from this program because it gives them time to work with me as their financial coach to look at ways to improve their credit and keep it high. For example, I would always encourage my clients to make sure that they make regular on-time payments, which help increase their credit score and help them get the required score needed to get a mortgage. Even better, having a higher credit score can give you access to more favorable mortgage rates. It also gives people who are earning a lower income time to earn a higher income or to build their savings. If a person's credit score or income is high, it also increases their chances of getting approved for a mortgage. But on the other hand, if it's not, they're more likely to be declined for a mortgage. What you need to know: the rent-to-own companies allow you to choose any home on the market that you want to enter into a rent-to-home arrangement with. The rent-to-own program allows you to rent the home with an additional option to buy the home. You're also able to buy the home because a portion of your monthly rent payments will be set aside. And this is called rent credits, which is used towards the purchase of a home as an eventual down payment. Before you enter any rent-to-own agreement, you must be absolutely certain that you'll buy the property. If you are uncertain and decide not to follow through with the purchase, then you may lose some or all of your paid rent credits and initial down payment. You should also know that the rent-to-own agreements can also lock in a home purchase price. The biggest restriction compared to purchasing a home outright is that it is still owned by the landlord. And this means all rules stipulated in the lease must be followed, because violating your lease might mean your right to purchase agreement will become null and void. If this happens, you will lose your option fee and rent credit deposits. How does the rent-to-own work? The rent-to-own program involves two sets of contracts, a rental agreement and a rent-to-own agreement. The rent-to-own differs from regular rents due to the addition of a rent-to-own agreement, which can be either a lease agreement or a lease purchase agreement. The lease option agreement is when you're given the option to purchase the home in the future, but you're not obligated to purchase the home. This allows you to walk away at the end of the lease without any additional penalties. The lease purchase agreement, in this agreement, you agree to purchase the property at the end of your lease. However, if you're not able to qualify for a mortgage or if you've changed your mind, it can result in penalties. I always advise clients who are interested in this rent-to-own program to be absolutely sure that they will buy the house before they get into one of these agreements. Also, not qualifying for a mortgage while under a rent-to-own agreement is something that should never ever happen. However, surprisingly, this is usually the case for some people. And that's why when you're transitioning from renting to owning, working with me as your financial counselor will be vital for ensuring your credit score is where it needs to be and to help you start to develop a home ownership mentality during your rent-to-own period. It's hard to suddenly change spending and borrowing behavior, especially when the rewards of these changes won't be realized until years down the road. To guide against not qualifying for a mortgage, you want to work with a mortgage agent like me, who will ensure that you are provided with a mortgage that is suitable to your unique needs. Also, I'm an accredited financial counselor that has extensive experience as a financial coach, helping people stay motivated to accomplish their financial goals. So for people who are serious about taking advantage of this program in Canada, make sure to check out my website, MoneyTimeCoaching.com, to see how you can leverage me as your financial coach to accomplish your financial goals. If you heard about financial coaches but want to know more about what financial coaching and coaches do, check out a video of what I did on financial coaches, and I'll make sure that that appears at the end of this video. The rent to own path. You will pay a monthly occupancy fee. The payment is fixed for the entire term, usually between 3 to 5 years. An important point here is that anyone looking seriously into the rent to own program will need to hire either myself or another financial counselor or coach that will offer credit and financial educational support throughout the entire process. So that way you can better overcome whatever got you into financial trouble in the beginning and be on a better footing going forward. Financial coaching will also help you better handle any financial problems you may be experiencing today. You get to build sweat equity, right? Because you're investing in the home. And so over time, you have a capped purchase price within the rent to own program. And because of this, the market generally goes up and above that. So you also get any improvements that are made to the home benefit you as well. And so in some cases, you can earn up to $200,000 in equity when you close out and end the rent to own program and become owners. There is a future down payment where 5% is the beginning amount, and then each month a little more is added to the down payment that gets credited to you at exit. And because of this, you're qualifying for a smaller mortgage. So an exit value is set probably below market value, and then you have a higher down payment going in, which means your loan to value is going to be better at exit. So for purchases, you can get into the market now while prices remain low before it starts to trend up. And for refinancing, you can stay in the home and buy it back at a later date when your credit has improved. Critical components of the rent to own program. Properly structured contracts are huge, right? They need to be approved by the major players like the Canada Mortgage and Housing Corporation, as Sagan, previously known as Genworth, and Canada Guarantee Insurance Company. If they don't have the right contracts, they don't even look at your rent to own documents. It's auto declined. I always tell my clients that you want to get mandatory independent legal advice to avoid any buyer's remorse. Financial coaching is critical. Don't let history repeat itself. Financial coaching will help you better your financial habits going forward. You also want to make sure that your debt ratios are within guidelines, because there is no sense in approving clients for the rent to own if they cannot qualify for a mortgage upon exit. And so it's very important to ensure that if you want to be successful at the end, and obviously you want to get the property, which is the most important, you have to learn how to use financial ratios to help you enhance your personal finances. And so you should see the link above where I do a video on simplifying financial ratios in a step-by-step guide. What are the qualifications for rent to own? The house must be within 4.5 times the annual gross income. There's no minimum beacon score. Incomes considered are wage, salary, commission, or self-employed. Child tax benefits and supports are also included. Unfortunately, the rent to own program will not work for populations with less than 10,000 people. The home must be primed and complete. Fixer-uppers can be approved, but would have to be inspected first. The home needs to be move-in ready. All seasonal vacation homes are eligible for the rent to own program, but no commercial element, no mobile or modular leased land or RV in parks. Can do residential families from 1 up to 4 units, condos, townhomes, stacked townhouses are also accepted as well. House values that are accepted into the rent to own program are usually between $200,000 to $1 million and up to $3 million on an exception basis. The purchase. The typical path of purchasing property follows the path of renting, then saving, and then buying. Rent, save, buy. But this path is harder than it used to be, right? And this is due to the high market correction, high loan to value that owners are forced to sell and then forced back into the rental market, which only drives up demand. Also, cashing out or renoviction potential of landlords where they sell or squeeze out the tenant. And this is projected that 250,000 rental households this year will become victims of this. We know purchase prices are going to increase again once the interest rates cool off and stabilize. Plus, we know 500,000 new families are moving to Canada each year with the push to new immigration year over year. Rents are increasing. It's up 21% per year in the GTA and Toronto alone, and it's up 29% due to a higher demand. So landlords can charge more for rent, which can make more of your rent payments go to waste if you're not into the rent to own program. So renters have enough for a down payment and their qualifying credit score is up, but they cannot always do what they need to do in short notice. So when you get asked by the landlord about whether you want to buy or move, these renters may find themselves stuck. This is unfortunate because people who do decide to rent in the long term end up chasing the market. And so sometimes the longer they wait to buy property, the further behind they fall, which makes them get priced out of their affordability. Since the path to buying is harder than it used to be, it only makes logical sense to stop renting and start owning through the rent-to-own program. Because this will ensure that you don't get priced out of your affordability and you get into the market right now rather than later when prices can increase past your budget. If you would finally like to have your rental payments go towards building equity for yourself through home ownership, reach out to me directly at MoneyTimeCoaching.com and I can help you with the rent-to-own process. I work with an industry leader who has funded over 1,200 rent-to-own programs since 2005, and I would consider them to be an industry leader. So when you work with me as your mortgage agent, I will be with you every step of your mortgage journey. And on top of that, you'll be in the hands of a lender committed to making you a homeowner sooner. Refinance, hitting that glass ceiling or mortgage default. For people that own a home, when the private lender comes up and says, "We are not renewing you," it's hard for some people to find a replacement, and that can be an A, B, or private lender. They just can't get the renewal. During the market correction, mortgages have also risen over 85% due to lower appraised value of homes. The cost of private lending has led to an increase in rates and fees, and lenders are rolling down the maximum that they're willing to lend. Clients behind on their mortgages are being served with a notice of sale, essentially being forced to sell. Clients in rural areas are even more affected by this because lenders that were willing to be in the rent-to-own space, who usually lowered their loans to value rates and guidelines, are no longer willing to do this in rural areas specifically. Rent-to-own as an option if you can't refinance your mortgage? To this, I would say yes, it is an option, but it may not necessarily be the best option. Since there are positives and negatives with this option, I'll explore both positives and negatives to give you a more comprehensive picture of this option. So let's say you're in a situation where you're at 81% loan to value, and if you can't find a private mortgage, you'll be left with no choice but to sell your house. In this instance, the good news is that the rent-to-own program literally would save your house and not charge anywhere near the rates of private lenders. But I do want to mention here that from a regulation point of view, it's viewed as a bad thing, right? Because you'd be taken off of the title and there is no certainty as to whether you'll be able to ever get back on. So believe it or not, the power of sale is actually a better option because you never lose control of the end sale, meaning that if there's anything left over after the sale, it goes to you. What are the costs of the rent-to-own? So you'd have to pay $975 for the program deposit, which is fully refundable at the end of the term, but not refundable during the term. The other fee would be the broker fee, which is around 1% of the purchase value. You'd also have to pay for independent legal advice, which is around $350 to $475. The home inspection is another thing you'd have to pay for, and this is around $295 to $650. You'd also have to pay for an appraisal if it's applicable, and that's up to around $450 and up. The first month payment is something you would also have to cover as well. In addition to that, you would also be responsible to pay the utilities. What documents do you need if you're a salaried employee looking to purchase or refinance under the rent-to-own program? Job letter, pay stub, a T4, a notice of assessment, debt settlement for debts in collection, or a path to have them paid off. A discharge, which can be a CP or BK if applicable. Fixed income proof, child tax benefit, spousal or child support, proof of down payment or gift, possible rental income on multi-units, property tax or mortgage statements for refinance. When it comes to mortgages, documents are an important part of the process because documents help give me and the lender a clearer picture of what your situation looks like. So when you work with me, expect to have your documents ready and I'll help you every step of the way. What documents are we looking for in a file for business, for self, or self-employed? Business registration, access to a bank account statements through a third-party service, your T4A, a commission, 2 years, your notice of assessment, debt settlement for existing collections, or have a game plan to pay them off. Discharge, could be CP or BK if applicable, child tax benefit, spousal support, or child support, and proof of down payment or gift. Why do some people think the rent-to-own program is a scam? In the past, rent-to-own dealers were realtors, investors, who took a rent-to-own course from Rich Dad or the Robert Allen Institute or Trump University and became rent-to-own experts. But they are not rent-to-own experts at all. This is what has led to the rent-to-own program not going mainstream as a common method to get into the housing market. How to spot a rent-to-own scam? You need to find out their default rates, right? Most fraudulent dealers have default rates of 75%. If they have high default rates, which I would consider anything in double digits to be a high default rate, this should be, in my opinion, an instant sign of a red flag, because it could indicate that they are intentionally approving people for the rent-to-own program that cannot afford payments to begin with. Shady players will have something silly like a $100 deposit, and I call this more of a what's in your pocket approach, where shady players will take whatever you have because they don't believe that you'll be able to successfully own the property in the end. The amount of deposits is normally around the 900 or the thousands, right? And this is because credible lenders underwrite for the end game, right? And this is because deposits are usually refunded upon successful rent-to-own program exits. If the required down payment is 0 or 3% down, no rent-to-own program will go that low. 5% is the minimum. If it's lower than that, it means the rent-to-own program is not properly engineered. If the program is a 1 year or 2 year program, it's a scam because you'll never be able to build up a sufficient down payment to qualify for a mortgage. You're not. It's just not going to work. Shady players don't provide credit remedial services as well. So sometimes these shady investors will have people with a low beacon score and only maybe 2,500 to their name. And they will take everything and say that it's for the rent-to-own program. The reason they will take your money is because they don't believe you'll be able to buy the home in the end of the term. So that way they want to keep a revolving door, right? And get money from people who are interested in the rent-to-own program over and over again without anyone actually buying the property. This is because when they default as the owners, they can have you removed and then they can just repeat the process over and over again, right? And so this is something that happens more often than you can imagine. So if you're serious about buying property through the rent-to-own program, then contact me so that way it's done right for you and you're not taken advantage of. Another thing that they'll do is they'll approve everybody, right? If you earn 20K a year and you're on ODSP and you've been qualified for an $800,000 home, it's mathematically not realistic, right? To think a person in that financial situation would be successful in a rent-to-own program. So there's no way that there's going to be a successful exit option for that type of person in that situation. So it's just set up wrong. And that's typically how shady players operate, right? It's just not realistic and it just doesn't make sense. Do I work with legit rent-to-own lenders? The answer to that is the lender I work with makes sure that this type of dishonesty is not practiced within their company. This is reflected by the company being accepted into the Association of the Canada Rent-to-Own Professionals. They have also been established in the industry for 17 years and are fully legit. Frequently asked questions. Is there any administrative fees? There is a nominal administrative fee of $2,000 to offset the closing costs and discharge fees for the investor. Who pays for property taxes and home insurance? The lender covers the property taxes and home insurance, but the renter would still need to pay for renter's insurance. How is the future purchase price calculated? There is 5 criteria. Number 1, the purchase price for today. Number 2, how much of a down payment. Number 3, how long of a term. Number 4, what is the property tax? And number 5, what is the current borrowing rate? These 5 elements is what affects the monthly payment and the future purchase price. For example, a house in Hamilton for $600,000 and the house for $600,000 in Oshawa, the Oshawa payment could be slightly higher due to property taxes. On the other hand, high crime rate or maybe a flood zone will also affect the cost of insurance. Let's say the house increased $150,000. Can the landlord jerk the rent-to-own purchaser around and sell it from underneath them? No, because everything has already been locked into the contract. It's already an accepted offer. You just have to wait until the closing date. What happens if when you go to purchase the property and the property is appraised lower than you thought it would be? Let's say, for example, a house that was supposed to be worth $700,000 is appraised at $680,000. You can approach the investor or landlord and ask if they can roll the purchase price down according to the appraised value. If they say yes, you just amend the agreement to the appraised price. What happens if you lose your job? If this happens to you, don't worry. Just communicate and extend your purchase agreement by a year. So that way you can build back up your credit, and the lender, and the landlord will both believe it's a win-win situation, right? Because they want to make sure that you successfully are able to exit the rent-to-own program at the end. Who is responsible for repairs? For this, it all depends on what has been agreed on in the rent-to-own agreement. Just make sure you are fully aware of what your responsibilities are. I want to make it clear. The rent-to-own option is great for you to get into the housing market, but it does require a bit of education, especially around mortgages. You do need to know certain aspects such as the loan to value, TDS ratios, credit requirements, and all that type of stuff. This is why I tell everyone who is serious about this rent-to-own program to at least book 3 financial coaching sessions at a minimum to gain more insight in how to successfully take advantage of the rent-to-own program. The amount that it costs you to learn how to own property sooner through financial coaching literally makes you wealthier quicker through homeownership. So like I tell everyone, our spending reflects our values. So if you do value homeownership, then booking 3 financial coaching sessions to help you own property sooner is a no-brainer. How can you invest in the rent-to-own program? Investors make an average of 12% cash-on-cash return per year and 26% ROI annualized. This outperforms most stockbrokers and financial planners. They can't come up with these numbers. This could be a better option than GICs, the stock market, and mutual funds, but it's a more aggressive investment strategy, hence the higher return. The good news is, as an investor, you're investing in bricks and mortar, and you're securitized, and there's also an engineered exit strategy in place. However, there are other risks as an investor that I can help you become more aware of in a one-on-one financial coaching session. The pros and cons of the rent-to-own program. The pros of the rent-to-own program. It allows you to build up your savings. You can build up a low credit score, test drive before you buy, which is typically only for cars, not for homes. You can move in right away without having to pay moving fees. The cons of the rent-to-own program. If property decreases during the lease period, you will still likely have to pay the original agreed upon price. If you miss a payment, then it may nullify the agreement. Don't forget to do your due diligence. Just because you're living in the property doesn't mean everything is right with the property. You still definitely need to do a home inspection. Have that conducted. The biggest thing to worry about is your mortgage qualifications at the end of your rental period. If you haven't improved your credit score, you may not be able to purchase the home because you won't get qualified for the mortgage. This is why working with me as your financial coach is critical, because it gives you the ability to be more successful at improving your credit score and qualifying for a mortgage. There could be add-on costs that you have to watch out for. If price values rise, landlords may want more money in the end. That's why you need independent legal advice to review the documents, which will ensure that you know the ins and outs of the contract and that you're fully informed. You may not have too much control over the property as a renter under the rent-to-own program, which is a little bit of a downside. My final thoughts on the rent-to-own program. So I think some people can struggle to obtain a mortgage, and this is because of their credit scores being too low or not being able to have enough saved up for a down payment. The rent-to-own program does provide a path to homeownership that allows people to not only get into the market, but stay in the market once they're in. It's unfortunate, but we are not taught about money, and more specifically mortgages and credit scores in school. The problem with this is that since it's not taught in schools, it can give us the impression that it's not important, when in reality, these things really matter, especially when it comes to purchasing property. Shelter is the most important thing we can buy. However, most people cannot buy it in cash unless you have $1 million sitting around. The majority of people do need a mortgage, but it's difficult to obtain, especially with a bad score and small savings. The reality is that since most people don't know how to effectively manage their money, they can develop habits that are not the most conducive to building wealth. And at the same time, these habits can negatively affect a person's credit score. This has the effect of delaying entry into the housing market for a number of people. This is why it's no surprise that renting is growing twice as fast as homeownership. If more renters were aware of the rent-to-own program, it would make them homeowners sooner. The rent-to-own program is not going to be a cakewalk. It will take hard work to improve financial behaviors. But if you are willing to work with an accredited financial counselor and a professional mortgage agent level 2 like myself, then I strongly believe that the path to homeownership will be more successful through the rent-to-own program. Going forward, I will be including a viewer of the week in all my videos. So if you would like to be featured as a viewer of the week, make sure you leave a valuable comment on this video about how my content has helped you become more aware of the rent-to-own program. If you found this video helpful and you would like to support the channel, don't forget to hit that like button, leave a comment, and hit the subscribe button so you don't miss any of this helpful content going forward. See you in my next one. You know what to do. Hit that subscribe button and become an official member of Money Time Coaching, where your wallet and your future self will thank you.